So what kind of a trader are you? Are you a bounce trader or a break trader? After watching this, you might come to our way of thinking. We only trade the bounce for a number of reasons. Two very important reasons, actually. There's more probability in the bounce, and there's more reward in the bounce as well, compared to the breakout. And as you're determined with your trading journey, you'll see for yourself that 99% of strategies out there are either a bounce strategy or a break strategy. So it makes sense to specialize in one or the other. So to trade the bounce or the break, it's accepted that there are two ways of trading. Swing traders are those that trade the bounce, and the momentum trader are those that trade the breakouts. However you trade though, it's entirely up to you. You don't have to listen to us. However, we've been in the market for quite a few years now, and we know what works for us. And pure logic would dictate that it makes sense to run with a style which gives us that extra edge, probability, as well as a much heightened reward to risk profile. Trading the bounce gives us this. So if we're looking at a level, a key level in the market, and price action approaching this key level, it can do one of two things. It can either smash through it, or it can bounce off it. There's a much higher percentage in probability that it will bounce off it. 70% actually, compared to the 30% that it's going to break through. Of course, if we're trading the bounce, we can't get it right the whole time. Sometimes we're wrong. However, if you're a bounce trader versus a breakout trader, you'll quite often find that they're on the other side of each other's trades. However, if we're trading the bounce, we are able to get a much smaller distance between our entry price and our stop loss, so we can get a much tighter entry, and tighter entries mean a much better reward to risk. However, the 70% chance that it has of bouncing off the level against the 30 is almost like a no-brainer. And this statistic has been backtested copiously. Also, as a bounce trader, we can avoid those false breakouts. You know, when price breaks through a level and then closes below it, much to the breakout trader's horror, that's not good for a breakout trader if that happens. It means they've been triggered into the trade and the bar is closed below the level, and that's fantastic for bounce traders because it means that we can take it to our advantage and trade it short. Let's take this example here. This is EuroCAD, and you can see the 14314 level. It's been tested 3 times in the past 2 years, and the rejections of it have had quite a whiplash reaction, certainly the last time it's occurred. And we can see price action hurtling towards it at the moment. But the burning question is, are you going to trade it as a bounce off the level? Do you think it's going to come back into the range and go back down? Or do you think it's going to break out and go long above this line here? Well, looking at the chart, we can say that on the past 3 occasions, it has rejected this level quite spectacularly. So if we trade it as a bounce off it, then we're rewarded quite handsomely because we can just basically place our order on the level or just below it if we get a reversal bar with our stop loss above it. Whereas if we're a breakout trader, we would have to have an entry above the level and our stop loss somewhere down here just to avoid that retracement. So what do you think is likely to happen? We will soon find out. So the bounce has more reward like we just mentioned, can have a much tighter entry. And sure enough, we're not right the whole time. Sometimes we trade a bounce off a level and it just smashes through spectacularly against us. However, if we've got reward to risk, i.e. a much higher reward to risk profile by trading the bounce, say for example we've got a 10 to 1 if we're trading the bounce and the bounce goes in our favor compared to a mere 3 to 1 if we were to trade it as a breakout. Now given that breakout only succeeds 30% of the time and the smaller reward to risk profile we have for the breakout, it makes sense to trade it as a bounce dogmatically. And even if we're wrong, with that high reward to risk profile, we can afford to be wrong a lot more times than we're right. That's the beauty of reward to risk, working in our favor here. And we can always ask ourselves that age-old question. If we are looking to trade the bounce off a level which hasn't been broken in several years, if we think that price action is going to break through it and it hasn't, we can just simply ask ourselves, what is the worst possible thing that can happen to us if we take the trade versus what is the worst possible thing that can happen to us if we don't take the trade? i.e. the worst possible thing that can happen to us if we take the trade is lose 1% or 2% if you're risking that much. But what is the worst possible thing that can happen if you sit back and miss the trade? Well, you miss out on a huge reward. That's the trade-off. So let's revisit our EuroCAD, and we can see that we were going to trade it as a breakout above this level and target the next technical level up there at 15320. We've got a reward to risk of 5.2 to 1. That's if it breaks out. There's a 30% chance it will break out. However, if you trade it as a bounce, we've got a 70% chance that it's going to bounce off the level, or ricochet off the level, and our reward to risk is a 10.5 to 1. So not only are we armed with probabilities, we're also armed with a much higher reward to risk profile. What more could you want? But remember, the market can do anything at any time. Price could go up, it could go down, depending on how good a setup looks or doesn't look. But if you've got a structure which goes on probability as well as reward to risk, then you can afford to lose more than you win and still be up overall. So just the contrast between the bounce and the break traders in this example, as well as many other bounce trade examples versus break trade examples. The bounce trader has got a 70% chance of probability of it bouncing off it in his or her favor, and a much higher reward to risk, whereas the breakout trader has a 30% chance of it going in his or her favor, and generally a smaller reward to risk. So let's have a look at what actually happened. It bounced off it. We had two high test bars, either side of an inside bar, and it went all the way down, hit our target, smashed our target. That's 10.5% profit. Thank you very much.